In this video, we're going to talk about how to navigate the price charts following price action rules to identify high probability setups. The structure of this market, which the first thing I need to do is to identify the bias, is indicating to me somewhat of a bullish structure. I can see that the most prevalent pattern was this bullish uptrend. So naturally, I need to identify the proper pattern for these candles, because these candles on the chart, they're always part of some pattern, and I need to identify the channel. Not only because I want to identify the points where I want to enter, but because I want to follow the trendline rule. So I have two options between I can choose. I can either draw a channel that is tight like this with the break a new high and now focus on the bearish bias, or I can draw the channel wider like this, which will put me still into bullish mindset. Now the reason why I prefer drawing a wider channel like this is because if I'm just going to draw this tight one, there was additional bullish momentum at the very beginning that it's not taken into consideration by this tight channel, and we moved quite far up. So the move was quite strong, so I'm going to use the wider channel. You can think, hold on, can I draw it like this? Not really. This would be too wide. Even though the first two swings are offering me this channel, this is too wide. I need to focus on the shortened price action because I have the pre-market structure and not that many bars. So naturally, I'm going to do the same thing for the bearish channel down, because there are patterns working for the main channels, but also for the corrections. Now you can see here, I have a two-legged pullback second entry long, which is going to form a high probability setup. But basically, there was a textbook two-legged pullback high probability setup right at the very beginning of today's session. You can see two-legged pullback at two key entry points, EMA and the trend line. This is the high probability setup where the correction phase will end and the opportunity to take long will be presented. So I can see that the prices are corrected. Now my main bias, as I already mentioned, remains bullish, which means I'm just waiting for prices to letting this correction play out for me to take long. Okay, prices are pushing above EMA. I cannot take no setup. I would need to get a failed second entry short, but we're below EMA and this is only high low. I can't take it. You can see EMA flattening. We're below EMA, horrible bar. I'm just waiting. There's a chance that prices may create new low for this very strong move down. Okay, so we can see the prices created a two-legged pullback to the upside. First leg up, second leg up. I can see that we are forming congestion because we have a lot of bars working sideways. EMA is flat. So once I'm watching this, chances are high that we're truly going to make new low first before we're going to take off higher. At the same time, can I sell? No. The main bias is bullish. I don't know how lower we're going to push. All I need to do is just wait for letting this bearish correction play out for me to think bullish again. Okay, we're breaking lower and we finally reached new extreme. This low retested the lowest low, so the market formed new low, and I at this point can start looking to go long if we push above EMA. Now I already have a new high, first entry long, pullback, second entry long. I have a two-legged pullback down, and also this is a small little failed breakout because we had a congestion, we broke lower. This is a trading range. Every congestion is basically a form of a trading range. According to rules, most breakouts will fail. Prices broke lower and most traders are selling the breakout. But here we want to buy the breakout. We want to fade it because the bias is bullish and we form new low. However, it is a little bit more advanced, a little bit more aggressive. Let's see if we can get a failed second entry short above EMA. Now high low is confirmation setup of the failed breakout, which once again, you can think about entering here, because this high low is confirming the second entry long and the failed breakout, and you pushed above EMA. Had it triggered below this bearish bar would have been better, but you're still part of the consolidation. The day is just starting. You know, it is better to wait for push above EMA and a failed second entry short, and we can't get it. So both of these setups are decent. You don't necessarily have to enter them, but study them, how the price action is behaving, because it is important. You can see price action is still following the rules. We expect new extreme to be formed, and this is the failed second entry short. New low, first attempt to sell, pullback, second attempt to sell. But notice the gap between the EMA and the failed second entry short. This is why we have the EMA on the chart. It is just a supportive indicator only, but it allows us to work with the price action. It helps us to stay away from losing trade, because this is telling me that we are too far away and I need to take setups that are closer to the exponential moving average. So I cannot go long here. Prices are pulling back, and notice strong bullish rejection. Now this is technically just a first entry long because micro double top resets the count. But I'm going to mark this setup more advanced traders because it looks visually like a two-legged pullback. You can see first leg visual down, second leg down, but more importantly, it is the true continuation of the failed second entry short, because the failed second entry short formed here, so far away from the EMA, pull back to the EMA, and strong big bull rejection. The stronger the bar is here, the more you can be confident that the first entry long may work. So technically you can treat this as a first entry short, second entry short failure as a part of the failed second entry short. Now it is more advanced. I was sitting here patiently. Like I said, the day was just starting. There's plenty of time before I'm going to make aggressive setup, but we expect new high according to price action rules. EMA keeps holding and the overall bias is bullish. So I'm just following the price action as it's developing in front of me. I'm letting the bearish corrections play out, and I'm just looking for variations of high probability setup to go long. And remember, high probability setup will form after the correction phase will end. So you may already start to see, notice, we had a move down, and this is where you need to buy. Move down, you need to buy low. Move down, you need to buy low. This is why you're using the price action rules to help you predict when to buy low. Because if you wait and buy high, you never know how strong the pullback is going to be. A market form new extreme. Okay, so I'm going to mark new high. So at this point, I'm expecting more sideways structure, possible reversal. But notice what's happening. After new high, you'd expect at least push below EMA, and didn't happen. EMA rejected prices. And notice what is happening. EMA keeps pushing here. Okay, so this is good sign what is happening right now. We just formed new extreme, and twice, once here, second time here, we were supposed to have stronger correction, but we didn't. EMA held twice, followed by a very strong momentum. So this is indicating to me, okay, probably a stronger bullish structure is starting. And now you can see, okay, definitely stronger bullish structure is starting. So I have two options how I'm going to draw a channel. First, I can look for a channel like this, which fits pretty well. But notice, here's a little tip. If I can see so much empty room at the top portion of this channel, this is generally the sign that this steep channel is not valid, and there is most likely a spike in a channel, because we had a spike, little bit of a two-legged pullback, correction, consolidation, and now we may have a flattened channel. So what I was looking for some channel like this. Just gonna copy, put it at the top, and this feels overall much better, because when you're observing a channel, you generally want to see the channel being filled from both sides. The earlier steeple channel, even though it's very good because the trend is most likely going to be strong, so it can still give you a lot of opportunities, it may not carry you throughout the rest of the day and throughout the entire bullish structure. So for this reason, empty room at the top indicating flatter spike in a channel. Prices are correcting, and I'm just waiting for a high probability setup. I cannot go long. And notice we have a first entry long. Now micro double, actually we have multiple matching highs, resetting the count. Now this right here is what it's called a hidden second entry short. Excuse me, hidden second entry long. Why hidden? Because technically there is no break above these bars. So this is technically first entry long. But you can see it looks like a first leg down, second leg down, and you have big bullish bar. If you go just on a slightly lower time frame, there would be trigger here and you would have first entry long, second entry long. This is why it's hidden, because it's hidden on this chart, but also hidden second entry long needs to form as normal second entry long would form at the key entry point, which is at the EMA. Okay, so if you understand what's going on here, you may consider going long here, but this is definitely more aggressive and more advanced. The signal bar is, once again, look at the perfect signal bar, but technically just a first entry long. Now we have micro double top again, which resets the count. So this is not high or low, this is just a first entry long because we reset the count. So I don't want to go long here, and notice I have a second entry long. Now a couple traders took it, but notice what's happening at this point. If this hidden second entry long is strong, you're supposed to exceed this latest high and supposed to go higher. The fact you had such a strong rejection down is indicating, hold on, the bullish momentum is stalling and you're correcting lower. And you can see that this may be the first leg and you may get the second leg down and you still didn't break this low. So prices are going sideways around the EMA. It's starting to be a little bit congested. However, I will mark it because the signal bar is okay. The structure is starting to look like a decently strong bullish trend, but you can see this was the first move down. Prices went sideways, they stalled. We were supposed to push higher here, strong bearish rejection, and prices are just hovering around the EMA. A lot of times is a sign that prices will break lower. However, decent setup to take a chance. You can see this would have ended up being a losing trade. We just started trading, and you can see you have a failed breakout, and market is going sideways. And now you can see congestion because EMA is completely flat in the middle of these bars. A lot of bars stacked right next to each other. And here you had a failed breakout, prices pushed above EMA, and you have high-low confirmation setup of the failed breakout. Now, however, you cannot go long here because it is too stacked, too congested. I'm not going to mark it, but I took this setup myself. I didn't take this trade, nor none of these setups. And the reason why I like it is because I was watching the structure, saw that we may have stronger correction down. We are stalling a little bit, and I was sitting on my hands here, then here, and now we have a failed breakout, push above EMA and a high-low. So just because I saw that the second entry long got trapped here, it really felt like we're finally going to push higher because the high-low confirmed the failed breakout. Look at the signal bar, you're back above the EMA. The strength of this trend is very strong, so chances are very, very high you're going to continue working hard. The main bias is bullish, but the reason I was supposed to wait here is because it is still congested. I was taking a chance, I ended up getting stopped out. Then there is another first entry short, second entry short failure. Very tempting setup. Sellers are going to get trapped. Look at this big bearish bar. The structure is bullish, but it's too congested. And you can see what happened. Market continue working higher. And now we have high-low breakout pullback. And this is the proper setup that now you can take, because the way you trade trading ranges, you either fade the breakout with the direction of a trend, which is bullish, or you take additional setup, the high-low. You broke higher, most breakouts failed, came back, tested it, so it's the breakout pullback, and now you know you can go long. So this is the high-low breakout pullback, and this is finally the sign the EMA is holding, breakout pullback, and market's gonna continue working higher. So you can see, even though you had the right idea to go long here, it was just a little bit too stacked, a little bit congested, and you can see there's no point in worrying about losing trades, because sometimes you just get stopped out by one single tick. Next time you will survive by one single tick. So it's all just part of trading. You don't have to be worried about this too much. You have to accept it because you cannot predict it. It is just a little bit too stacked, a little bit more whipsawing before the market eventually continue working higher. So I actually took this high low here, ended up having losing trade, and then I was thinking re-entering here the failed second entry short, which was extremely tempting. But after you take a losing trade, you should be generally really sure you want to take it, because you don't want to be revenge trading. Your mind will play tricks on you. The revenge trading is number one reason why traders make mistakes. So I recommend after losing trade taking a little bit of a break. But I couldn't re-enter due to the fact that we are now in a congestion. I got stopped here due to the congestion, so I cannot really re-enter here again. And now finally, when we get break out of this congestion, breakout pullback, this is where I re-entered, and I managed to get a decent runner. So prices are working high, new high, first entry long, second entry long, far away from EMA. Okay, first entry long, and we have a second entry long, but the second entry long, notice the body is so far away from the EMA. It's right on its high. Very tempting setup to go long, but just feels a little bit more aggressive. And by the way, I want to talk about one more thing. This is a very strong trend. How do you recognize strong trend? A lot of small bars working higher, minimal bearish pullbacks, and healthy 45-degree angle. This is the strongest trend you will ever see. The healthy 45-degree angle trend. It feels like the market has to roll over. It cannot push higher. You're tempting to sell, pick a top, but you cannot pick a top. You're gonna get trapped. Stick with the trend. EMA keeps rejecting, and if it's a strong trend like this, you have to take a chance on these aggressive setups. Otherwise, you will never find a setup. This is why I took a long here despite the congestion. This is why I marked the second entry long, even though it's not good. But I can see why someone would take a chance here, because if it's a strong trend, you have no other chance but to try pull the trigger on these aggressive setups. Otherwise, you will never fully get a chance to participate during this trend. And you can see, once again, you're rewarded here if you take the second entry long. It is tempting, just feels a little bit too close on its high. Okay, we're going higher. Okay, and this is now pretty much clear bullish structure, healthy 45-degree angle. So we're just counting from the latest high. We need to buy low where the correction phase will end. You can see the correction phase is ending at the EMA. First entry long, second entry long, far away from EMA, can't take it. But I can see small little support forming. And notice new low, first entry short pullback, second entry short failure, quadruple bottom, and visual leg down, second leg down. So this right here is a failed second entry short, larger two-legged pullback, and you can treat this as a double bar entry because you have a very strong bullish bar, two key entry points, the small little support, quadruple bottom, and the EMA. We talked about how the structure is very strong bullish trend. You have larger two-legged pullback, and this is a great scalp. And notice what we have. We have late second entry long characteristic because we have a spike, trading range structure, spike out, empty room here, and the bearish correction is going to be longer. So for this reason, I'm going to redraw my trend line because I can see we're breaking below EMA, and notice how the trend line is fitting nicely off of these highs. So I'm not interested in taking second entry long below EMA. Okay, you can see doji, you can't take it anyway. The downtrend is in play, cannot go long. Okay, and also what can help you to stay away from these longs, you're just coming after the bounce of the trend line, of the upper trend line. So you may have correction to the downside. So multiple reasons here for you to expect a little bit of a pullback, especially the downtrend is working lower. So now we're working lower. Okay, we finally have new extreme. So I can resume longs now. I can start looking for longs because notice market likes moving pairs of twos. First leg down, second leg down. Can I get something above EMA, high, low, failed second entry short? I cannot. The market just keeps working higher, but you can see we're correcting. I need to redraw the uptrend. Pretty much you can already predict what I'm looking for and what I'm going to do. This is not extremely difficult. This is actually one of the easiest days you can get. One of the disadvantages of these strong trends is just that the setups form a little bit sketchy because the market is just barely, slowly but surely creeping, working higher, and you just have to be a little bit more aggressive. This is why it's a little bit uncomfortable, especially for developing traders, because nothing is really forming that clean. You're never fully sure if you're supposed to pull the trigger, but if you see such a strong trend, you pretty much have to pull the trigger. New high, first entry long, pull back, second entry long. You take one tick lower, all the people selling lower high directly into EMA get trapped, followed by tier 1 bullish signal bar. EMA keeps holding, great high probability setup, second entry long. And now we get a full second entry short, but it is too far up. The bar is big, you have no room to scalp, and there is no trigger either way, so it doesn't really matter. No way for us to enter. Am I expecting high low? I cannot take high low because we just exceeded the latest highest high. So there needs to be probably a little bit of a correction. And we're going a little bit sideways. We have 4 bar stacked, neutral bar. We have a second entry long. The second entry long is a little bit stacked. Also, we just exceeded the latest highest high, so we may have stronger correction. I will mark it as more aggressive setup. It's always better for you to still have room to get out and the correction to be deep. Here you just exceeded the latest highest high and the correction wasn't as strong, but it is a second entry long, a little bit sideways, but it is okay to take a chance here. More aggressive though. And market continue working higher. Okay, we're pulling back. Once again, redrawing the downtrend. And notice prices are founding support at our trend line. I'm just going to tweak it a little bit to make sure it is confirmation of the bounce nicely. And you can see how the price action is behaving because this right here is a two-legged pullback, second entry long. If the channel was a little bit easier to spot with more confirmations here, you can actually enter long here because you can see you have two-legged pullback, first leg down, second leg down, downtrend played out with new low, which is indicating that it is okay to go long because the sellers are no longer active. We're following the trendline rule. Two-legged pullback indicating end of a correction, and you're at the very bottom of the key entry point. So this is already decent setup. If it's a strong trend, chances are very, very high you're going to push higher. But this is definitely a bit more advanced because not that many people are going to have the trend line in play. So you can take a chance here to get pullback, but it's of course better to wait, push above EMA and get a confirmation. And now you have the confirmation setup. First entry long, second entry long, high low, confirmation setup of the second entry long. Strong tier 1 signal bar, back above the EMA, resulted into great momentum. Once again, redrawing the downtrend. First entry long, can I get a second entry long? Not really, we didn't really break below. High low is too far up, not touching the EMA, not room to get out. I can't take it, even though it's working here. I need to follow the rules. Okay, and we have strong correction. Now you have to zoom out. Notice how long we've been working to the upside. So the correction may be longer. For this reason, I'm going to redraw channel wider, and I expect for this downtrend to get a new extreme. And this downtrend is still very tiny compared to this overall massive bullish push. So I see a first break of the spike and channel. What am I expecting? For prices to form new extreme, new high. So I'm only waiting for prices to form new low for this downtrend and to offer me a failed second entry short above EMA, which you already have. New low formed, break, new extreme. We have a high low. Can I take high low? I cannot take high low just yet. This is a strong bearish push down. I don't know how deep the correction is going to be. I'm not at the key entry point. We're below EMA. I need at least failed second entry short, at least. We never closed above EMA once. I cannot go long just yet, and notice what we have. Counter trend, triple test. Strong push above EMA, resuming the bullish bias, and I may start looking for failed second entry short. New low, first entry short, second entry short failure. But notice how it formed. Body is not touching the EMA. You're closing at the very high of this leg up, and it's neutral. Big stim at the top, stim at the bottom. So this is more aggressive, even though you feel like you're going to probably push higher. It didn't really set up that well. I can't really go long here just yet. It actually gave you the chance to get out if you took it a break even. You can see there was a congestion, but the setup really didn't form that well. It really needs to form great. Micro fell breakout, and market keeps working higher. So I'm going to redraw the uptrend because I expect for market to create new extreme. I'm looking for second entry long. I cannot buy these highs. Okay, we have a first entry long, second entry long, but I need to respect the short-term downtrend. You can see one leg down. There may be new low. I cannot go long, even though it worked for a scalp most likely. I break new low, two legs down, getting pushed off EMA. Okay, so you can see first leg down, largest second leg. You're not thinking to sell because the uptrend still needs to get new high. Main bias was bullish. Even this channel now needs a new high. So two channels. Okay, can we get us some decent setup? Horrible higher low, bearish bar. I can't go long. And now you have a two-legged pullback, second entry long, new high, first entry long, second entry long. But notice the first single bar was bearish bar. You know, double bar entry maybe. More aggressive trader can pull the trigger here. And market is working higher. And now it's getting too late. But you can see perfect price action. This channel received new extreme, and even this channel received new extreme. Very easy day to trade overall. Very simple price action. You don't need no indicator, no volume profile, stochastic, order flow, none of this stuff. Everything is being given to you by pure price action. It reflects human behavior. It never changes. It's all the same throughout the years. If you go back 20 years, 30 years, the price action is still the same. It doesn't change. The only area where you could have gotten chopped was this area right here, where you could have had a losing trade or a couple of losing trades, but you need to accept the losing trades because you can see how many chances you get to make it back with following simple price action. So you can't really predict a couple of fake outs. It was a little bit congested. I even took a high low and I got stopped because I really thought I was going to be too smart, not getting trapped earlier, but it managed to get me one last time. But I managed to make it up on this trade and get a very nice runner to the very high. So you can see strong option day. I'm going to wrap it up. I'm going to talk to you next time. Take care, everybody.